Welcome back. Well, Cartesian Capital's Anthea Gardner joins us now for a wrap of the day's markets action. Thank you so much for your time, Anthea. Of course, China continues to be a big driver of market sentiment. We did have GDP figures coming out last week, of course, amid the stimulus talk, and they actually did cut their 1 and 5 year loan prime rates. What have you made of those?
Hi, Zanati. So China's such an interesting one, and I always talk, and I think you and I might have spoken about this before, how I wrote a piece on China GDP growth and Western skepticism is what I call it, because as Westerners, we really like everything set. We want to know that every 2 months we have our central bank meetings and we know more or less what the central bank's going to do, and there's no kind of our governments, don't make decisions just off the cuff, right? But China has not got a problem with that. So because it doesn't work for us as Westerners, we worry, we struggle with assimilating the Chinese way of doing things. And
so we value predictability.
Correct. But China doesn't operate the way we in the Western world do. And make no mistake, I love my freedoms, but they will do whatever they need to do to get things done, basically. Yeah. And so if they think, and everyone's saying, is the stimulus they've done enough? Yes. Well, who cares? Because if it's not, guess what? They will do more stimulus. China's got this self-imposed 5% GDP growth target. I wish our government would stand up and say, oh, hang on, we aim for X amount of GDP growth. Like we've got on the one side, the Reserve Bank going, this is our inflation target, and this is interest rates and where we're going. But at no stage does government say, okay, we are going to commit to 2 or 2.5% GDP growth in South Africa for the next 2 years. But wouldn't it be great if they did, and then did whatever they needed to do to stimulate the economy?
Yeah, that's actually quite an interesting way to look at it, that, you know what, even if it's not enough, we'll get to a point where at some point it will be enough. We'll do more to try and get to that target because there's a vision that we're working towards. You spoke about... Yes, Anthea?
Sorry. So I always tell this story, like China will do what China has to do to get what China wants. And in 2008, they decided they were going out into the world, kind of just around the time that, Naspers was having this problem with Tencent and there was all sort of stories, right? And they decided they're going to go out into the world and become a global player. And they were going to start and improve the view of China. And they started this by saying that they wanted to host the Summer Olympics. Yeah. As they bid for it, they got it. Not only did they get it, but they threw whatever they needed to at their athletes to win as many gold medals as they needed to. China will do whatever China needs to do to not lose face and to get to where they need to be.
Yeah. To me, applying that mentality for the last 2.5 months of the year, Anthea, even though I only have 2 working days left in me. Talking about one of those visions, you talk about the SARB, the South African Reserve Bank, also talking a lot about lowering the inflation rate. Of course, we know that we are getting the September inflation print this week. And of course, the last one, I think, went down to 4.4%. Is the lowering of the inflation target a necessity?
So, such an interesting question. I think a lower inflation target would be extremely good for South Africa. I mean, Kganyago has definitely made the point that inflation is really bad for the poor, and we have so many poor in this country. What it means, though, from an academic perspective, or where do we go from here? Like, how does that impact our terminal rate? And Jaco's point, in other words, do we have to have higher interest rates for longer to make sure that we reach a new lower inflation target? But Jaco made a good point, that he moved the target from the band of 3 to 6 to middle of the range at 4.5. He's reached it. He reached it without, as he puts it, very little cost. I'm not sure I completely agree with him on that. People are complaining about the higher interest rates. But when it is his last term as central bank governor, and I'm tempted to say that he almost wants to leave this legacy, which wouldn't be bad, but in the short term, it might give us, I think, some pain. I think it would be great if he could get to 3.5% inflation target. Look, we've already got what we now, I think consensus for Wednesday is 3.8%, without, too much difficulty from like 4.5 to 3.5. Maybe we could.
All right. Well, talking about things that you can do, your stock pick for today, Anthea, what are you choosing?
Right, so I've gone with Pan-African Resources. It's been, I won't lie, I'm a bit nervous because it's been one of the best performing gold mining stocks of the JSE already this year. So the share price more than doubling year to date. It's a mid-tier producer. The company generates all its revenue from gold. It's about 8% of Anglo Gold and about, I think, 6% of Gold Fields in size. I mean, they've got some really great things. They're focusing on the Mogale tailings retreatment plant. There's a lot going on. They all in sustainable cost on average was like $1,400. So with the gold price at 2,700, I think they're doing okay. Like one of the problems though is that they did hedge out about 30% of their production. I'm not in love with their hedging strategy. They did a zero cost collar, which means they could sell at 2,100 and buy back at 2,900, and we're kind of reaching that, like slowly climbing towards that 2.9, right? Hopefully they aren't forced to buy back at 2.9. But I think it's a good. They've got a nice, good margin on their production.
All right. Well, thank you so much for your time and giving us insights on what has moved investors' money today, Anthea, and your stock pick. That was Anthea Gardner from Cartesian Capital.